AIB is delighted to participate in the Better Business Show, and we'd like to thank the SFA for organising this initiative. And what I'd like to focus on is some insights into assessing bank finance. Maybe the first thing I'll talk about is that old chestnut, are banks really lending? The word in the street, I suppose, is that banks are not lending, yet at the same time we have the banks saying they're meeting their lending commitments as agreed with the Department of Finance on the recapitalisation programme. In the case of AIB, we have been recapitalised, and therefore we do have the money to lend to the SME sector. And while certainly the bulk of financing that we're doing today is refinancing or restructuring existing facilities, we certainly have an appetite to increase new monies to the SME sector. Recently at our results presentation, our CEO announced that we have an objective of increasing our net new lending to the Irish economy in the SME sector by 20% in 2012 over 2011. We do have deleveraging commitments, but the SME sector is excluded from those deleveraging commitments, and indeed any reduction in our SME balance sheet does not count towards meeting our deleveraging targets. So the growth in SMEs, in AIB's SME balance sheet, is actually critical to our financial viability, and we have an enlightened self-interest to support a vibrant and a strong SME sector in Ireland. But the lending in the future will be different than lending in the past. The days of a casual conversation, sure, you know I'm good for it, the asset is worth X, those days are gone. Having been saved by the taxpayer, we have an obligation to ensure lending is directed to companies who have the cash flow to support the repayment of that debt. So it's not focused on the asset that's been financed anymore, it's been focused on the cash flow coming from the debt. That means we need to be more formal about the application process, and we need a lot more information in order to inform the credit decision. We acknowledge this is a shift for our customers, it's also a shift for our staff. We've been taking a lot of time out to invest in training for our staff and putting tools in place like the standardised application form, cash flow templates, business plan templates, all of which are available on our website to help customers navigate their way through the credit process. But we also acknowledge that we need to ramp up our engagement with customers, to get out and meet our customers, find out about their businesses and understand the pressures that they're under. And that's why you've seen in AIB we've launched a campaign recently called the Big Drive for Small Business, and that is really us drawing a line in the sand in terms of us getting out trying to meet our customers. So what do we mean by viability? And the bullet points listed on the slide here are a direct lift from an agreed definition with a wide group of stakeholders, including our host here this evening, the Small Firms Association. We know that the severe trading conditions have caused many Irish SMEs to incur liquidity and solvency problems, but we also know that when normalised trading conditions return, the same SMEs will rebuild their balance sheet, and we want to support them in that stage so that we can support them in the return to growth and to solvency. But I also recognise that many businesses today are struggling to demonstrate viability, and I'd like to take the opportunity to stress a few points about these customers. Firstly, you're not alone. In AIB, we have 30,000 customers who are exhibiting some signs of financial stress today. Secondly, contrary to perception, open and early engagement with the bank is essential to dealing with the problem. A problem deferred or denied is a problem doubled. We know that in the recent past, we as an institution haven't been geared up to deal with customers in difficulty. That's why we've taken special measures to invest in the number of staff who are available to deal with customers in difficulty. We now have 1,000 staff trained to deal with SME customers in difficulty. That compares to 600 at the end of June. Our core strategy in this area is to cure, to restructure, and to restore the business to viability. With 30,000 customers in stress, our financial viability is dependent on success here. Our approach is case by case. There is no quick fix. but we do want to work with you to understand the pressure points on your business, to understand the bigger picture, and to develop a solution that makes sense from your perspective, from a taxpayer perspective, and from the bank perspective. So turning towards the application process for credit, it's a 4-step approach, and we have a booklet that's actually on our website on how to apply for credit. Most of the banks have a similar booklet either available in their branches or on their website. The first step is come talk to us. Meet your relationship manager. This will help the relationship manager to understand what is the information he or she is going to need to process your credit request. Get the application form. One of the things that we did last year with Bank of Ireland, and indeed Ulster Bank have taken it up as well, all the banks now have a standard application form when applying for credit. You should get this at your first meeting with your relationship manager. The second step is to review and prepare your business plan. Now, this is not a document for the bank. This should be a living document that you are using for yourself to describe the journey that your business is going on, what your strategy is, and what inputs do you need. Some of those inputs are finance, some of those inputs are marketing, equity investment, and so on and so forth. So that's a document that should be updated on a regular basis and not just being used for your appointment with the bank. The third step is the numbers. And again, these are not just things that we, the bank, need. We find that when we talk to many SME customers, not many SME customers are looking at their numbers on a weekly and monthly basis. They see their engagement with the accountant as something to do on an annual basis to prepare their tax computation. But if you want to run your business, obviously you need access to these types of numbers on an ongoing basis, and we need them, depending on the size and complexity of your application, to help judge whether or not there's sufficient cash flow to repay the debt. The fourth step is to complete all the documentation, the standard application form, whatever information the relationship manager requested, and submit it maybe 2-3 days in advance of an appointment. That'll give the relationship manager time to digest it, to understand it, and to prepare him or herself for your appointment. And that appointment should be used as a means of selling your story to the relationship manager, because the relationship manager is your advocate inside the bank in terms of getting that credit process through the system. What I'd finally say is we should also be discussing what financial products you may use here. I know many businesses use an overdraft, but an overdraft is not the most suitable product for certainly medium or long-term financing. So, having gone through the 4 steps, it's now up to the relationship manager to process the application. And at this point, he or she will advise you how long it should take. In AIB, we're targeting a maximum 15-day turnaround time from this point. We know we've more to do here, but that's the objective we set ourselves this year, is we want to turn around within 15 days a decision in relation to a credit application. But if I may say a few words about approval and decline rates first. In AIB, about 30% of the credit inquiries we get don't make it to this stage. So for whatever reason, when we get an initial inquiry, the customer doesn't follow through into a formal application. And that could be for a variety of reasons. It could be that the customer finds that the credit application process is too complex, too cumbersome, and that's why we've put in the tools in place that we've done. It could be that in the engagement with the relationship manager, the view might be that this isn't a viable proposition. That may or may not be true. It could be the case that the customer may see that the bank or head office won't lend the money. That's not true. But what I would say is that the approval rate for that 30% of credit inquiries is 0. If you don't make a formal application, the decision will be 0. Of the 70% of applications or of inquiries that do convert to an application, 9 out of 10 do convert into a formal credit decision, into a formal sanction. And that number, I think, speaks for itself. But we do recognise that there's an awful lot of work on the customer, on the staff member, to convert that credit inquiry into a formal credit application and into a positive decision. So the key takeaway is, if you do need credit and you have a viable proposition, please work with your relationship manager to make a formal application for credit. If you're declined, or if the terms of your credit have changed, or if indeed we don't respond within a 15-day time period, I'd encourage you to use the internal appeals process. This is an objective process. It involves 2 experienced senior bankers who are independent of the original credit decision, and we must respond in writing to you within 15 days. We value this process. We don't fear it. It gives us an awful lot of insights into what's going on around our network. Department of Finance did a survey back in November, and it showed that 78% of SMEs who refused credit in 2011 disagreed with the bank's decision. In 2011, AIB had 3,000 declines. So that should suggest that 2,300 customers were not happy with the bank's decision. However, AIB only had 165 internal appeals in 2011, or 7%. But making an appeal is worthwhile. We usually get more information from the process, and also because it's a process involving more experienced bankers, we do get an additional insight that we may not get at the first time. Approximately half of our internal appeals do get sanctioned. The other half, while the original decision is upheld, the SME is getting additional information into why we rejected the decision, and they can feed that back into their strategy and plans going forward. So I'd urge you, if you are declined, or if you feel your credit case has not been dealt with fairly, please use the internal appeals process. And if you're not happy with the outcome of the internal appeals process, please use the offices of the credit review officer through the external appeals process, the details of which are available on the website there. So what can you expect from AIB in 2012? We know the perception is that banks, and perhaps AIB to a greater extent, is that we are closed for business. And that's why in AIB we recently launched the Big Drive for Small Business programme. And this is not just a marketing stunt, it's a first step in AIB demonstrating that it wants to support the SME sector in recovery and ultimately the growth of the Irish economy. And we want you to see that in 4 key ways. We want you to see increased evidence of engagement by our staff during 2012, where we're out there working with you to support your business. We want to speed up the response time, as we know the customer experience is that in recent years the response time for a credit application is taking longer. Our target, having received a formal application and all the information support application, is we want to turn that decision around within a maximum 15 days. We know we've more to do, but that's our target. We hope you will see new lending propositions during 2012. We did launch the Job Creation Loan Fund, which offers loans between 10,000 and 250,000 to those businesses who wish to invest in their business that ends up creating jobs. And we're targeting an attractive rate of 4.4% at that, which I think is probably the most competitive rate in the market at the moment. But you'll see similar lending initiatives in the agri sector, micro-enterprise sector, and also emerging sectors throughout 2012. Finally, as part of the Big Drive for Small Business, we are having a series of seminars in AIB branches at the moment involving a third-party action coaching service called Action Coach. We've had very good feedback from our customers on this, and we hope to expand this into wider classroom type training later on this year. And we think this will provide valuable insights for businesses, especially micro enterprises, in managing their business in the future. So to recap, the recapitalisation of AIB means the bank has money to lend, and we do want to lend new money to the SME sector. It is crucial to AIB's financial viability. Yes, there's a shift in focus for the emphasis on cash flow rather than security or the underlying assets. I'd ask you, if you have a business that you believe is viable and you have a demand for credit, please test us by making a formal application. We do say yes far more often than we say no. If we say no and you're unhappy with the outcome of that decision, please use your right to an internal appeal. If you're not happy with the outcome of the internal appeals process, please use your right to an external appeal through the Credit Review Office. Thank you very much.